Welcome to part 3 and last of the video titled Block Trades Are the Most Fraudulent Practice. Guys, Goldman in this deal bought 30% of this hospital stock from that private equity firm. He paid $2 billion upfront to the private equity firm. And that 2 billion they raised in the form of credit line from the interbank market. Now, did you ever notice that to whom Goldman would be selling this? Would Goldman be selling this to a normal investor? No. If they would be selling this to a normal investor, it would be taking years for Goldman to sell. And since they raised $2 billion, they don't have the sufficient time to wait. They need to encash it. So Goldman left with limited options. Number one, they might go to hedge funds to have a transaction. Hedge funds always buy the equities, always. They may go to the high net worth individuals. Mr. Bill Gates, Mr. Warren Buffett, all them, so that they can explore of thinking their investments, their surplus cash in this company, which is a hospital company as per our example. They may go to the family offices. Now, what the hell is family offices? Family offices means all high net worth individuals, they invest their money via a dedicated office. And that office is known as the family office. So practically speaking, that family office is managed by professionals, but the reality is after, Archios Capital Management scandal, who was also a family office of Bill Huang, we all know that how these family offices work. Anyways, so there is a problem in this block trade. What the hell is problem? Let me give you an example from our foreign exchange market and let me link this with this example. Suppose today Microsoft is selling 500 million GBP in US dollars. So let's take an example. Microsoft US get 500 million GBP from their customer, whatever, and they wanted to sell in dollars. What do you think? Microsoft have all top banks in their panel: Goldman, JP, Citi, Wells Fargo, Morgan Stanley, probably Deutsche, Commerce Bank, ANZ, Westpac, everyone. Would Microsoft be calling only one bank? No. The treasury function of the Microsoft would be calling everyone. Goldman, Citi, Morgan Stanley, Wells Fargo, UBS, Barclays, Bank of America, JP Morgan Chase, almost everyone. So one deal of say 500 million GBP would be circulated in an interbank market, and it would be multiple times. The more banks you would be adding, it would be multiple times. Now, what is the problem? Similar situation we have in investment banking. When the Goldman would be selling this, suppose in tranches, because selling 40% at one go is fairly impossible. That way, Goldman would be contacting all investor once, not together, once. And there is a huge hype in the market that a block trade is going to get happen. This may trigger a substantial sell-off in the system even before a block trade is going to get occur. Of course, theoretically speaking, Goldman would be signing the non-disclosure agreement with the client that we are here for discussion and you won't be selling or sharing this information with the public. But we all we all understand the value of non-disclosure agreement, be it any country of the world. Henceforth, there are multiple chances that the employees of the big banks, those who engaged in, I would say, those who engaged in these block trades, they might be tipping off deliberately or non deliberately to their counterparts, to the banks, to the family offices, to the pension fund, to the credit risk fund, that this potential block trade to happen. One thing which I haven't covered is the type of underwriting. Whether this is soft underwriting or whether this is hard underwriting. This is something I haven't covered. I might be covering later on. Because if you are thinking that block trades do not have an underlying, then you are completely incorrect. They have underwriting. Now, this situation becomes more difficult in case of startups having losses. In India, we have seen in case of Paytm, in case of Zomato, in case of Nikia, in case of Policy Bazaar, in case of Card Trade, when their IPO launched, the big private equity and the venture capitalist firm decided to do offer for sale. But what the hell was offer for sale? I repeat, the statistical definition of offer for sale is that an existing investor is quitting, but that existing investor holding a substantial share. He is not going to an exchange selling 1 share, 2 share, 3 share, 4 share, 5 share. Did we ever got to know when the existing investor sold, who bought it? We never get that information, because this is the beauty of the block trade. In block trade, the face value matters. And that's a very important point in block trade. Face value matters. Having said that, in block trade, one important thing that really matters is the timing and the lock-in of offer for sale. You will also never get to know that the firms who arranged initial public offering for loss-making startups, be it India or be it any country of the globe, how they are engaging the block trade. You will never get to know. All of a sudden, you will see, oh my God, this company was at 650 few minutes ago. What the hell? Now it is 580. From 650 to 580, what the hell? This is called block trade. And if you are thinking that the people do not have an information about the block trade, then you are incorrect. Now, practically speaking, block trade is of two types. Probably in the next videos, we might be covering this. Number one is the block trade without having any credit line. And that credit line is by the Goldman. Is for Goldman by the Interbank. I repeat, for Goldman by Interbank. Other is block trade without any credit line, which by the way is very risky. And it may end up huge triggers for that investment bank and probably that company himself who is entering into the world of block trading. Block trading is a very interesting world. Very interesting world. And if we gather information, we will get a lot of knowledge. But unfortunately, be it India, be it any country of the globe, you rarely get an information of the block trade. You will never get that block trade can even be syndicated, which means that a 10% stake selling in one company might be offered to multiple companies 2%, 2%, 2%, 2%. This is Rahul Magan from Treasury Consulting Group. You know my personal number 9899242978. In case you have any questions, you can WhatsApp. If you feel that the question is genuine and deserves an answer, we will surely reply. Have a great time ahead. Welcome to the world of block trades.